Happy Friday, everyone. It is the 27th. We did make it through another week. Throughout the week, you guys should have been working on your reinforcement packets. I know I helped several of you guys throughout the week, so if you guys still have any questions or issues, please let me know. Again, I did post your checkpoints for your reinforcement packet, so please make sure you guys see those checkpoints to make sure you guys are on the right track so you don't get to the very end and realize you made a mistake. The hangout sessions on Thursday I have scheduled for 11 and 3 o'clock. Those I do want all of you guys to jump on, whether it's the 11 o'clock one or the 3 o'clock one. I just want to touch bases with you guys, see how you guys are coming, if you guys have any questions, and just answer questions and whatnot. Okay, so I know yesterday I didn't get to see some of you guys since you guys didn't jump on, but I do want all you guys to jump on one of those next Thursday for sure. I do know some of you guys are already done with your reinforcements because I have received a couple of your submissions already. Once you do get down to your reinforcement packet, please just take a picture of your completed pages and then email them to me. I don't know, there's probably about 7 or 8 pages or so. All I have to do is just take a picture, attach your pictures in the one email, and then I'll take it from there. We are ready to move on to chapter 18. I know some of you guys are waiting on me, but here we go. As you guys see, chapter 18, we are going to be working with purchasing plant assets and also working with depreciation. So the chapter goal right here is to define accounting terms related to plant assets, depreciation, and property tax while calculating depreciation expense using a couple different methods. This first section in chapter 1, our goal is to be able to journalize how to record the buying of a plant asset and then also calculating how to pay the property tax. So let's get started. First one, recording the buying of an asset. This could be anything from like a computer, this can be a car, whatever it is. Okay, in your lifetime, you guys will be looking to sell a variety of different products, assets, whatever, whether you already sold a car, whether you already sold a computer, you already sold some sort of equipment. Okay, this chapter you guys are able to utilize later on in your life when you guys are selling these kind of things. So the first one, on January 3rd, 2011, you paid cash for a display case, $3,250, check number 4. So pretty self-explanatory since you guys have already done this journal a lot. Source stock is check number 4. So with the source stock being a check, you jump into your cash payments journal right here. The account we are going to use, the display case, falls under your store equipment. Your second step, your $3,250. Since we are buying store equipment, our account is going to be increased. So that's why it's a debit right there. We use a check. Whenever we use a check, our cash decreases for $3,250. Okay, so that is journalizing when you are buying a plant asset. Now when you are working with posting, okay, same thing. You're in your store equipment ledger, your account, drop that $3,250 right on into your debit column. Now since your balance is already debit, this is a debit. All you have to do is add those together. Once you have your current balance, your account number, that 1215, bring that right back up there into your journal. Okay, so this is something that you guys have not been exposed to already. You guys should already know how to do this. But this is whenever you buy a plant asset, how you journalize and post. Now moving on into your calculating your property tax. Okay, so on February 1st, Classic Parts Incorporated paid cash for property tax, $720. We used check number 69. In this example, the tax rate is provided to you. Not all cities are the same at this 1.2%. However, here's your account that we are going to use. It's your property tax expense. Check number 69 goes right there. To get this 720, whatever your property, whatever you are assessing right there, what is the value? If it's $60,000 in this example, $60,000, your tax rate of 1.2%, all you have to do is take that $60,000 times 1.2%, or if you do it in decimal form, 0.012, and it comes out to be $720. This is how much you are going to pay in property tax. So bring that $720, throw that into your general debit. Again, you use a check, so your cash is going to be affected, that same $720. Your debits and your credits are still equal, so you are good to go on this transaction. Okay, so now looking at the work together, I'm going to zoom in for you guys so you guys can see it a lot easier. Scroll up. All right, I'm gonna read the example on page 537. I'm gonna walk you guys through this one since this is something we do every single chapter throughout the course of the year. All right, the transaction that occurred on January 3rd. You paid cash for a paint mixer, check number 142, for a total of $500. Okay, so that paint mixer falls under your stored equipment. On January 3rd, your check number was 142. You paid $500 for it, so that's why you have your debit $500 in your general. You wrote a check that affects your cash for $500. Okay, so right there's transaction number 1. Transaction number 2. You paid cash for an office chair, check number 145 for $400. An office chair falls under your office equipment. Transaction happened on the 5th. You wrote the check number 145, and it was written for $400. So that's why your cash credit, there's a $400 there, and that's why your general debit is affected, because your office equipment is being increased. That's why it's a debit, since it's an asset account. Your third transaction happened on February 26th. You paid property taxes on real property, which is assessed at $80,000. The tax rate in the city where the property is located is 3% of the assessed value. You wrote check number 182 for it. Okay, so right here, February 26th, your account is your property tax expense. Since you're paying your property tax, you wrote check number 182. To get that $2,400, what I'm going to do is take $80,000, so 80000 times your 0.03, and that comes out to be $2,400. This is where that $2,400 is coming into play. Again, all I have to do is take the amount that your property is assessed at, which is $80,000. The city tax rate was 3%. So take that $80,000 times 3%. That's where that $2,400 number comes from. Again, you wrote a check, so your cash is affected. Your property tax expense, boom. Your last transaction, July 2nd, you paid cash for a filing cabinet, check number 216, for a total of $260. Okay, so July 2nd, your filing cabinet falls under office equipment. You have check number 216. You wrote that check for $260, so right there's your cash. Your office equipment is being increased, so that's why that's in the debit. Now, instruction number 2, post the general columns of your cash payments journals. Now, it's asking for us to post these transactions. Okay, so the first one, store equipment. You have store equipment right down here. Transaction happened on the 3rd. Debit 500. Debit 500 happened on the 3rd. We're pulling from your cash payments page 1, right up there. Debit balance. transaction was a debit, go ahead and add these two numbers to get that. So that 9,730 plus 500 equals your 10,230. This number right up there for the account number, 1215. Throw that right back there into that 1215 box. Second, office equipment. Right here, happened on July 5th. July 5th, CP1, cash payments 1, page right there. Debit 400, debit 400. Again, this is a debit balance, so add these two numbers up to get your updated balance. February 26th, you have your property tax expense of $2,400. Here's your property tax on the 26th, cash payments page 1. Here's your $2,400. Doesn't have a balance yet, so that's why you throw that $2,400 into your debit, because that is now your balance. Your account number of 6145 is now brought up there to finish off your posting. And then your July 2nd office equipment, again July 2nd, CP1, 260. There's your 260. This is a balance, a debit balance. This is a debit transaction. So again, you add them up. Here's your updated balance. In your 1205, bring that up into your office equipment box. Okay. This is something that you guys, with the exception of your property tax, this is new to you. However, journalizing your store equipment and your office equipment, that's something we've been doing since last semester. Okay, so a lot of this is not new. The only thing, the little bit that is new right now is your property tax expense. But in order to find that number, you take the property that you're working with. If it's assessed at, in this example, is $80,000, take that amount that it's assessed at times your tax rate to get this number. Okay, so for going back to this, it was 80,000 times 3%. That's why this is at 2,400. Okay, so now going back. Okay, looking at our goals. Okay, again, chapter goal, defining the accounting terms using different methods. Okay, we haven't quite got to that yet. However, we did get to the plant assets and the property tax expense. Okay. Section 1, journalize how to record buying of a plant asset, and then calculating how to pay property tax. That's section 1 in a nutshell. If you guys do have any questions, please let me know. This next video will be over section 2, and that will be a little bit more intense with the straight line depreciation method. Okay? Alright, I'll see you next time. Enjoy the day.